Attends, laisse-le parler. Attendez.
Good morning. Good morning, ladies and gentlemen. Our dear participants, you're very welcome to our webinar today. My name is Brenda Katarikawe Opus, and I work as the Senior Export Marketing Executive. I handle both products and services. I will be moderating today's session, and I'll be taking you through what we have today. So, ladies and gentlemen, you're all very welcome to our virtual export readiness webinar. And today's webinar is about financing for exports. So financing for exports is also, I've told you in the past, this series were introduced to be able to help companies interested in exporting to start exporting, but also those exporting to be able to improve their performance. Next week, we'll be having 2 more webinars where we'll have marketing and digital marketing. And these will be 24th Wednesday and 25th Thursday. So as we get organized to start today, our program is as follows. We shall have introductions so that we all know each other. We noted that yesterday, when we were going through introductions, a number of people learned of different businesses, and we could see discussions going on. I hope today we'll be able to have the same and also learn what benefits you have been able to achieve by being on this platform. We shall have opening remarks from the Executive Director of Uganda Export Promotion Board. Then we shall have 4 panelists today, and they'll be taking us through key topics in the finance for exports. We shall then have Q&A and discussions after that. And the reason we have it after all the presentations, we want to have all the questions coming in by the end of the different presentations. Now, we encourage all of you to submit your questions through the Q&A section so that we can pick them very quickly and be able to respond to them. We also have that chat section, which we encourage you to put in information about your companies, what you're doing. If there are any areas that you want your fellow participants to learn about your company, please put it in there. Now, our panelists today will include Esther Katende. She's a trade law consultant with EK Consulting Group. We also have Stephen Mwesigwa. He is the Managing Director of Maisha Integrated Holdings Limited, but he's also a finance consultant. Then we will have Willie Mutebi. Willie Mutebi is from URA. Then we'll have Rosette Bamwine, who heads the Agricultural Credit Facility section in Bank of Uganda. So, ladies and gentlemen, that will be our session today. I hope most of you were part of yesterday's session, and I hope you also received the evaluation form that we send out. We would like to learn from you how you find our trainings and what more you would want us to include. So in case you haven't gotten an evaluation for yesterday, please let us know in the chat. We shall share it with you, and we shall be able to get your input. Now, we shall start with introductions. Our time now is about 6 minutes past 9. We hope to have introductions for 20 minutes. before we have the opening remarks. So the way I'll handle introductions, I will read out names and ask you to unmute and introduce yourself. I'd also like to request that once you have introduced yourself, please mute again so that we don't get interruptions from you. Now, introductions, very similar to what we had yesterday. You will tell us your name, you will tell us your company name, and you can also give us your expectations out of this training. So we shall start off today with Colin Jolie. Please unmute and introduce yourself.
Good morning, everyone.
Good morning, Colin.
Yes, I'm Colin Jolie Anyek from Japotech Solutions. We deal in ICT services, and yesterday I'm the one who asked about the services sector because most of the deliberations were about products. So my expectation today is that I hope they will also touch on services for some of us who are in the service sector. Thank you.
Thank you very much, Jolie. Now, we've been having very specific webinars for services. For instance, we had one on education, but we are also planning some more which are specific to services. But in some of the ones we have now, definitely some of them also touch a bit on services. So you're very welcome, Jolie. Now we'll have Mpora. Mpora, please unmute and introduce yourself. Mpora, are you there? Can you unmute and introduce yourself? Okay, we don't seem to have Mpora. Carol, kindly unmute and introduce yourself.
Good morning, everyone. My name is Carol Omba of Carol Natural Spices. We deal in spices and herbs and looking to export spices and herbs. Expecting a lot today. Thank you.
Okay, thank you very much, Carol. You're welcome. Can we have now Chris Masiko? Chris Masiko, please unmute and introduce yourself. Chris Masiko, kindly unmute and introduce yourself. Okay, we don't seem to have Chris with us. We go down to Dennis. Dennis Katende, please unmute and introduce yourself.
Good morning, everyone. I'm Dennis Katende from Straightforward Limited, Fruits and Vegetables. I'm expecting to learn about different forms of financing as per today. Yeah, from different players. Thank you.
Welcome, Dennis. Okay, now we go to Godfrey. Godfrey, please unmute yourself.
Yes, good morning, everyone. I'm Godfrey Kasaja from Fresh Foods Limited. It's nice to be here.
Okay, you're very welcome, Godfrey. Next, we shall have Josephine. Josephine, kindly unmute and introduce yourself.
Hello, everyone.
Josephine.
Good morning.
Good morning to you.
Good morning. Josephine from Nakasi Group of Companies, and we are intending to export fruits and vegetables to Europe.
Thank you very much, Josephine. You're very welcome. Next, we go to Joyce. Joyce, are you with us? Kindly unmute and introduce yourself. Joyce, are you there?
Yes, for Fresh Hubs Uganda Limited.
Kindly a bit
Thanks
louder,
for
Joyce. We can't hear you properly. Joyce, sorry, we
Yes.
can't hear you properly. Kindly speak a bit louder.
Good morning, ladies and gentlemen. I'm
Good
Joyce
morning.
Nalika Nsobuga for Fresh Hubs Uganda Limited. Thank you.
Thank you very much, Joyce. You're welcome. Now I'll have Junior. Junior, kindly unmute and introduce yourself.
Yeah, Mwandinda from Wafa Group Holdings Limited, intending exporters for fruits and vegetables. Thank you.
You're welcome, Junior. Thank you. We shall have Lydia. Lydia, kindly unmute and introduce yourself.
Good morning, everyone. My name is Lydia Nakaenza Schubert. I run Onka Planta Uganda Limited. We process shea butter and moringa oil for the local market and export. And we are looking to export more of Uganda's cosmetic oils. Thank you.
Thank you very much. Okay, do we have Roger Sima? Kindly introduce yourself.
Good morning, everyone. I'm Roger Sima from Salama Coffee Estates Limited. We do export coffee, do process and export. My expectation today is really understanding more about the payment terms. I do expect to hear how things like LOC, cash on documents and all, how they function, and I think that will be good for me. Thank you very much.
Okay, you're very welcome, Rogers. Eric Magandi. Eric, please unmute and introduce yourself. Eric, kindly unmute and introduce yourself. Eric, are you with us? Okay, Eric seems not to be with us. Okay, go ahead, please. Eric, we can't hear you. Eric, kindly introduce yourself. Eric Magudi, are you with us?
Yes. Can you hear me?
Yes, now we can hear you. Please introduce yourself.
Good morning, everyone on the panel. This is Mugad Eric from Wonderwork and Supply Department.
Beg your pardon, we didn't hear the last bit of your introduction.
I'm Mugad Eric. I work with Borderwork. I'm in Supply Chain Department.
I see. Okay. You're welcome. Okay, do we have Chris Masiko? Chris, are you with us? Hello, Chris. Okay, it seems he's off. Can I have Jacob? Jacob, kindly unmute yourself. Hello, Jacob, are you there?
Yes, I'm there. Good morning.
Yes.
My name is Kabondo Jacob. I'm the director of Wondermill Grain Millers. We do maize processing. So I'm looking forward to learning more about export of maize products and maize grain.
You're welcome, Jacob. Okay, can we have Donald? Donald, are you with us? Kindly unmute and introduce yourself. Okay, we seem to have lost Donald. Senoga. Elias Senoga, kindly introduce yourself.
Good morning, everyone.
Good morning.
I'm happy to be here again. I'm Senoga Elias from Alnabawi Agro Products. I would request if I could be connected with Madame Caro after the session, because I've seen she's having what most of you like. I'm apologizing, we are not in the country, we are away, but we get problems of network connection. So sometimes we get, like yesterday, I got disconnected because of network. But my expectations are to see how the board is willing to help us, more so the people who are joining the export business as new members, how they can help us and they help us grow further. Thank you very much.
You're very welcome, Elias. Thank you for that. Now, Caro, you can hear Elias would like to connect with you. Kindly drop your contact in the chat so that Elias can be able to get it. You can chat with him privately. Okay. Now we have 2 minutes to end our introduction. So I think I have Mr. We have, let me see who hasn't introduced themselves. Roxanne, kindly unmute yourself.
Hi, good morning to everyone. This is Prakashan. I represent Lake Perch Limited. We process and export fish, Lake Perch. Thank you.
You're welcome. Thank you very much. Okay. Chris Masiko, are you with us now? Can you introduce yourself? Okay, we don't seem to have Chris yet. Okay, so one more person, Caroline, kindly introduce yourself.
Yes, good morning, everybody. My name is Caroline Areto. I work with Celebrand Limited, and we deal with export of clothes to Norway. Thank you.
Thank you very much, Caroline. You're welcome. Okay, ladies and gentlemen, I'd like to bring the introductions to the end. For those who haven't introduced themselves, we will request that we introduce ourselves either somewhere along the way or at the end of our session. So ladies and gentlemen, as we get into the whole gist of our webinar today, allow me to introduce our Executive Director and welcome him to give us the opening remarks. Our Executive Director, Eli Twineyo, you're very welcome.
Morning, ladies and gentlemen, and welcome to yet another exciting and important meeting, capacity building as part of export readiness assessment and support activities. And this one comes at a good time also, because yesterday, in yesterday's meeting and training, some of you were asking us and asking me about issues of export finance, saying that commercial credit is expensive, and yes, that's true, we know. And when you get it long term, it is way more expensive. And so you guys were talking about development finance. And I promised that will be in another session, which is today. So today we look at the various sources of export finance, the various sources of export financing an enterprise. And let me mention also that our ministry, working with us and everybody, came up with what we call the NEDS, the National Export Development Strategy. In the National Export Development Strategy, we have suggested, our minister suggested an export development fund. Export development fund does not necessarily mean that it is an aspect of promotion. It means also a part of production and part of the whole entire chain along different nodes, as we call it in agriculture, that the support we could give to people and enterprises producing for export, because we know that exporting has challenges. So if we are subjected to commercial bank credit, we'll get challenges. Again, like I said yesterday, Uganda Export Promotion Board is available to support you very strongly, to support you achieve your objectives of making profits, of making money, of having your enterprises become big and grow. We, as government, as an agency under the Ministry of Trade, Industry and Cooperatives, are being supported and strengthened to support you. When you look at NDP 3, Uganda Export Promotion Board has largely been assigned a lot of responsibilities over the 5 years. But also important is that export promotion has been identified by government in the NDP 3 as a development strategy, has been identified as a development strategy. And when you talk of a development strategy, then we are talking of a different thing. A development strategy is bigger than when you are talking of like a trade strategy, a marketing strategy. A development strategy means it is that strategy which is aimed at helping a country achieve its development objectives, which include increasing GDP and the welfare of the people, reducing inflation, reducing debt problems. And you should know, ladies and gentlemen, that exports actually help reduce the debt burden, because if you want to earn the dollar and the pound and all the other foreign currencies the better way, then you better earn it, don't beg for it. And that's why we are excited about the next 5 years of working with potential and actual exporters of different products and services. And please remember that under NDP also, we have been given responsibility under 5 programs. A private sector development program, we have manufacturing, we have agro-industrialization, we have minerals development, we have services, and overall, we are supposed to coordinate all export-related activities. So we hope that we can work together during all this time, and I wish to declare this meeting officially open. Thank you.
Thank you so much, Edie, for the opening remarks and for keeping within your time. Greatly appreciate that. Now, ladies and gentlemen, we will get straight into our panel discussions today, and we shall have our first panelist, Esther Katende, and she'll be handling how to secure your exports, and this is mainly to do with contracting for exports. So Esther, you're very welcome. You can, if you have your presentation ready, you can start off. Thank you.
Thank you very much, Brenda and the Export Promotion Board. I'm very glad to be here. And it's interesting that we're talking about exporting, you know, financing for exports. One thing I want to note is that before we talk about financing and exporting, we have to know what type of contracts we are going to enter into, because it's important that these contracts, I'm just preparing my presentation as I speak. It's important that share screen. Is my screen shared?
Not yet, Esther. Yes, now it's coming up.
Okay.
Kindly put the full view.
Is that better?
Yes. Thank you very much. That's better.
Yes, like I was saying, it is important to know what kind of documents you have to have in place. One of the things that financials look for is, are you streamlined? Are you doing the legal things that you're supposed to do? So in my presentation, as Brenda explained, I'm a trade lawyer and I teach or facilitate, among other things, international trade transactions. How do exporters export what they're exporting? What laws are they supposed to look at? How are they paid? What should they look out for payment? And what documents must they have? So my discussion really is focusing on the legal aspects and especially the contract. Because you see, even if you're looking for financial support or any other financing, you have to have the legal documentation ready and right. So this, I'm only going to focus principally on the documents you need and the kind of export contracts that we do. So first of all, I'll just talk briefly about a contract of sale. If you're going to export, it means simply look at it like how you're selling your product to someone in Chikubo, you know. Before you go to the person in Chikubo to supply, you enter into an agreement. You can write down this agreement or it can be oral. But when it's written down, it's much better, because when it's written, if there is any dispute or disagreement, you go back to what you wrote. So here we are looking at an inter-country trade. And we're looking at a Chikubo in, let's say, Kenya, or in Dubai, or in Europe, any other country, and you want to supply that person abroad. So what kind of contract do you enter into with them so that you're able to supply them? And when we talk about this, we are really looking at that there are two distinct parties, you the exporter and the importer, and there's transfer of property. You're looking at transferring your property. Now, in law, it is important that you notice there's a difference between transferring goods and transferring property. For example, you could have a car and you have a logbook, then you are the legal owner of the car. But you could have just possession of the car and no logbook. So in law, we always emphasize that you must note that you must transfer the legal ownership. You must transfer the logbook. So in my discussion, I'm going to keep emphasizing and pointing out what aspects demonstrate that the ownership, the legal ownership has passed. Not only the possession of the goods, of the, the goods you're selling, maybe it's the herbs, the fresh fruits, but you must ensure that you're also transferring the legal ownership. Because if you have transferred the legal ownership, then you have cause to complain or you have the right to sue in law. But if you've not transferred the legal ownership and it's only possession that has passed, then in law you have no right to claim. So those are some of the things I'm going to emphasize. Now, international contracts of sale, you realize that you don't know the laws, for example, that operate in Dubai or in Norway. You have no idea. And they also don't know how business is operated in Uganda. So with this background, the International Chamber of Commerce came up with rules that are called Incoterms, international contract terms. And these rules are supposed to govern all people who are exporting all over the world. So our role today is to explain to you what are these contract terms, because they're standard terms. Whenever you're going to export, you have to choose which kind of international contract, which kind of Incoterm you're going to use. So it is important that you understand these terms. Some of you know them, some of you don't know them, but well, we are going to just explain the terms, especially the most common two types of Incoterms that are used in international trade all over the world. So the reason these Incoterms were brought into practice is that there was a lot of misunderstandings of trading countries. There's a different trade custom in Uganda. How people do business in Uganda is different from how people do business in Norway or Europe. So these Incoterms came up to create international standard rules so that everyone who's dealing with this trade automatically knows that this is what it means. These are my responsibilities as the exporter. These are the responsibilities of the importer. So Incoterms really are international terms and conditions that describe the contract of sale of goods between importers and exporters internationally. Like I said, they were created in 1936 by the International Chamber of Commerce, but they've been amended over the years to adjust to changes in technology, changes in money transfers, all these things. So we have the 2020 rules that are presently running, but they're all Incoterms and they're standard contracts, standard terms, and the obligations of the exporter. They outline the importer's obligation, where is delivery going to be made, who's responsible for transportation, who's responsible for maybe the export license or import licensing, cargo pricing, all those things. That's what the Incoterms outline. And like we have said, this next slide is really a summary of that they are terms that are designed for business convenience. And they just provide a set of rules that are used commonly all over the world. So that in case there is an uncertainty or an misunderstanding, it is clear whose responsibility was whose. So we have different types of Incoterms. There are different categories. There's what they call the Group C Incoterms. This is CIF, CPT, etc., etc. That's just one category of Incoterms. Like I said, the parties must agree on which category of Incoterms they're going to use, which type of Incoterm. So there's what we call the Group C Incoterms. Then there's what we call Group F Incoterms. There's also Group E Incoterms. And I'm not going to explain all these groups. I'm just going to focus on two major terms of contract, Incoterms. And then these other ones are just a variation of those two. They just interpret the terms differently. But these two are the main common ones that are used. So these are the different Incoterms. As you can see, there are many. EX, whatever is X works, you know, and all these are all available to you to use and choose. But like I said, we are going to focus on the most common ones that are used. And one of these is the CIF contract. And by CIF, we're talking about cost, insurance, and freight. And in this contract, you, the exporter, you're the one who covers the cost of your goods, the price you quote to the importer, that price you quote to the person you're sending your goods to in Norway. That person gives you a payment that covers the cost of your goods, the insurance of those goods, and the transportation of the goods. In other words, in a CIF contract, you meet your costs, the cost price of the goods and everything that is involved in that cost. You carry out the insurance. It is you to look for the insurance. You're the exporter. You're the one to look for the insurance. So that you insure the goods from the time they're on the ship until they reach their destination. And then you also talk about freight or transportation. You're the one to look for the shipper or the transporter, and that is your responsibility in the CIF contract. Now, we mainly look, when we talk about CIF, we're more talk about goods on sea, you know. But I notice most of you are doing fruits and vegetables and fresh herbs. These ones are usually done by airlifting because they get spoiled, but some are done by sea. But my focus, they are the same principles, but the CIF mainly deals with goods by sea. But there are other contracts like we see also that deal with air freight, but it's the same principle really, like I said. So like I said, CIF is the most common popular term used in international trade. Almost all sea carriage is done by CIF. You send your goods to, you the exporter send the goods to Mombasa, and from Mombasa you get the shipper that takes the goods to their destination where they are going to get, and then payment is made. So this slide shows you what the responsibility is of the buyer and the seller. You find that you, the seller, the exporter, you load your coffee or your shea butter, you put it on a truck, the truck moves it at your cost to Mombasa at your cost. You get the load, guys who are loading it onto the ship at your cost. And then once they're on the ship, you carry out, you contract the shipping company that takes them to the next country where they're going in Norway, and you pay for the goods to be offloaded in Norway. And once they're at the port in Norway, your responsibility has ended in a CIF contract. So when they reach their port of destination, the responsibility of you, the exporter, ends at that point. So let's look at the CIF in detail. In this case, Johnson and Taylor, we're talking about law, so we have to slide in a case. This case established what CIF contracts are all about. What is the responsibility, or what is the exporter's responsibility in the CIF? You, what is your role? You're supposed to make the invoice for the goods. You're supposed to transfer them. You're supposed to transport them to the port of shipment, Mombasa. You're supposed to get the shipper, the freight guys, that is from Mombasa, the ship that's going to be used until it reaches its destination in Norway. You're supposed to arrange for insurance for those goods as long as they are traveling until they reach the port in Norway. And after you've done all this, you're expected to forward the documents you've used. That is the invoice, the bill of lading, and the insurance policy. Now, when you forward these documents to the importer or to the buyer, and they receive that document, in law we deem it that they have received the goods. So as soon as these documents have been received by the importer, then you have transferred legal ownership. It's like you've transferred the logbook to them. And in law, if there is any damage or anything that happens before that time, it is your responsibility. But as long as you hand over the documents, even if the goods are still on the seas, on the high seas, as soon as the documents are received, in law we consider that property has passed. So the goods then become the responsibility of the importer. So key features to understand about the CIF contract. Once goods are delivered, once documents are delivered, it is deemed in law that the goods have been delivered. So even if the goods are still on the seas for 3 months, as long as the importer has received the documents, the bill of lading, invoice, delivery order, all those things, then it's supposed to be the invoice, the bill of lading, and the insurance policy. Once they've received that, then in law they're deemed to have the goods. And it's also necessary for the exporter to deliver the documents on time, on the agreed time, within the agreed time. This is because legal ownership passes once the documents have been delivered. And when the documents have been received by the importer, then payment is made. We are going to look briefly. Someone was asking about method of payment. We'll look at that briefly. So these are the responsibilities of the exporter. You, the exporter in law, these are your responsibilities. You ship the goods that tally with the contract of sale. If they say they want 500, they want cartons of moringa, that is moringa oil, that is what you supply. You supply the documents, you prepare them and send them the invoice, pre-shipment inspection, the bill of lading, insurance, all those documents, you pile them together and send them to them by either DHL or any other courier. They need to receive the originals. Then you check, you mark, you deliver, pack the goods very well and put them on the ship. You incur the costs for shipping the goods and moving the goods to the port of shipment to Mombasa. Then you must inform the importer that the delivery of the cargo has been put on the ship and the ship is sailing on this date. You're supposed to carry out the export license. Let's assume Uganda has an export license. I'm actually not sure about that. You're required, depending on the goods, you're required to carry out the export license to find it and formalize and clear all the transit requirements. That is your duty as the exporter to address all the transit requirements of all the countries the goods are passing through. That is the responsibility of the exporter. So you bear all risks and for loss and damage until the goods are put onto the ship. And when they cross the ship's rail, then it's a responsibility of the insurance company for the insurance you took out in case any damage happens to the goods. So the responsibility of the buyer or the importer, on the other hand, they're supposed to tell you the shipper what ship to use, maybe, or they're supposed to tell you the shipping time and the port of shipment, and where the goods are supposed to be delivered. Then they're supposed to give you the information that you need to take out the insurance for the buyer. You're supposed to accept, the importer is supposed to accept the transportation documents that we talked about. Then they're supposed to make payments once they receive those documents. Through insurance, they're supposed to carry out the insurance, to agree and receive the insurance cover and meet any other costs, especially the importation cost, maybe importation license or anything that needs to be done from the importation sites. The importer is supposed to be doing that. And then they're supposed to receive the goods once they reach their destination. That is the duty of the importer. So let me briefly talk about these documents that I say that are important because, like I said, in law, once you transfer these documents, you're deemed to have transferred the goods. The first one is the invoice. We all know what invoices are. They must be exactly selling what is in the goods, and they must tally with all the other documents, Then we have the bill of lading. This is the most important document because it shows that you've delivered, you, the exporter, have delivered these goods to the shipper. It shows what type of goods they are, basically the marks and specifications of the goods. It shows that there is actually a contract of transportation of these goods because this bill of lading is provided by the shipper. When you take the goods and you put them at the port in Mombasa, when you're loading them onto the ship, the shipping guy gives you a bill of lading that marks all these things, that shows this is what I've received it on this day, this is what it looks like. And it's covering the entire journey. So this bill of lading is the most important document. And whoever has the original bill of lading has the goods. So if the importer on the other side goes to receive the goods and they don't have an original bill of lading, they cannot be given the goods. In fact, this bill of lading, as probably most of you know, you can even transfer it to someone else because whoever has it has the goods. So the shipper keeps a copy, you the exporter, you keep a copy, then you send the other copies. You give your bank a copy if you're going to pay through the bank, as you see, and then the other copies are sent to the importer because they must produce a bill of lading so as to be able to be given the documents. And even you, the importer, the exporter, you produce this bill of lading so that you can be paid because it's the one that shows that you have actually shipped the goods. They're out of your hands. So you present it to the bank that is going to pay you, as you're going to see later on, and then you get paid. So a bill of lading is the most important. Like I've said, the different functions, it shows that you have received the goods. It's a receipt. It's a document of title because whoever has the bill of lading has the logbook, basically. Whoever has the bill of lading has the title to the document, to the goods, all the goods. Average of transportation between the shipper and the buyer and the seller. And then it shows that there's transportation of the goods because it's given by the shipping company. The insurance policy, I'll not go into so much detail about insurance. Really, like we say, the insurance in CIF carried out by the exporter on behalf of the importer, but the payment is done by the importer in the price that is given of the general price. So who obtains the import or export license? This is another document, the import or export license. Usually depends on who is more convenient. It's the exporter, the importer that provides the import license. But it depends on what is more convenient because it's very hard for you as an exporter in Uganda to go and procure the import license for the guy in Norway. It's easier for the Norwegians to do it themselves. So this in law is depends on who has the ability to do it easily. So what are the remedies in case you, the exporter, you've sent your goods and you've not been paid or they refuse to pay you? The law gives you the right to sue. We can sue as long as the property has passed, as long as the documents have been sent to the seller, to the buyer, to the importer, because that means the legal ownership passed to the buyer or to the importer, therefore you can sue. You can also sue for damages for non-acceptance. In other words, you sent the goods and the importer refused to take them. You can sue them for damages, for compensation, because you sent your goods, wasted your time, and in case that you've sent the wrong goods or the wrong documents, they have the right to reject the goods if they are wrong, or they can also reject the documents. And when they reject the documents, means they've rejected the goods. It represents the goods. They can also sue for damages or compensation because you failed to deliver the right documents or the right goods or at the right time. You shipped the things late. They can sue for damages. So the second contract that I want us to talk about is the FOB contract. The first one was the CIF contract, cost, insurance, and freight. And that one, the responsibility of costing the goods, insuring them, and transporting them was the sellers or the exporters. And the price quotation, you as the exporter in an CIF contract includes all those three. In an FOB contract, on the other hand, FOB means free on board. The quotation of the price you give is only for the cost of the goods and getting the goods to the port where they move. For example, how much it will cost the goods they're buying and getting the goods to the port in Mombasa. That is the cost you give. So you're not responsible for the shipping or choosing the ship. You're not responsible for finding out insurance. You try to help, but in law, you're not held responsible for those other parts. So you find that most people prefer the CIF as opposed to the FOB because the CIF for the importer is much better, but also for the exporter because you get more money by quoting for insurance and quoting for all this. So the FOB contract, you find that as you see in this picture, the responsibilities, you get your goods from the warehouse, they pay for them, and you transport them with your own truck until you get to Mombasa. And once you load the goods onto the ship, your responsibility ends there. So from the port of shipment, Mombasa onwards, that's not your responsibility as the exporter. You don't have to be bothered by that. That is the role of the importer from that point on. So in an FOB contract, where we are saying that the exporter pays the cost and bears the responsibility until the goods reach the ship's rail, not beyond that. Until they cross the ship and sit onto the ship, that is your responsibility end. After that, it is a duty of the buyer or the importer. So what is the duty of the exporter here? Deliver goods to the port of shipment, which is Mombasa, pay handling and transportation costs until the goods are put onto the ship, make sure the goods have been well packed and loaded, deliver the goods on the date of shipment required, and you'll be deemed to have delivered the goods when they enter, when they sit onto the ship, when they cross the ship's rail. Even if the documents have not reached, even if, you know, the documents are still on the seas, as soon as you put the documents on the ship, you're entitled to be paid. That is for an FOB contract. So what is your remedy in an FOB contract? Same as the other side, you can sue for non-payment because you've not been paid and the goods are put on the ship, or you can sue for damages or compensation for wasting your time or not taking the goods. What is the duty of the importer? The importer must nominate the ship. You know, it is the duty of the importer, because remember, for your responsibility is just to put the goods on the ship. So the importer must tell you what ship they want to use and where it is found. And the importer must secure the shipping space in an FOB contract. That's their duty. They must pay, of course, the price for the goods, and the importer must look for the licenses. You may be responsible for the export license because it's easier, but they're supposed to be responsible for all the other things, transit documents and all those things. It's a responsibility of the importer because that's where the FOB stops. Remedies in law, they're the same remedies. Reject that they're wrong, say that we got bad goods, compensate us, they were not what we had asked for or what we had ordered for. Now, property, like I've said, in property or ownership, legal ownership, passes when the goods are put onto the ship. So as soon as they enter this ship, while they are here now, it's a responsibility of the buyer and the insurance they've taken out for their goods. If they have not insured them, should they catch fire, should the ship sink, it is not the responsibility of you, the seller or the exporter. It is principally their responsibility. So now let's look at methods of payment. You have sent the goods, you put them on top of the ship, or you have sent the documents. How are you going to be paid, you as the exporter? You can be paid by check. We all know how checks work, although it's very hard for you to receive a check from nowhere and infect it, but that can also work if you're using an international bank. You can be paid by draft. You can be paid by telegraphic transfer. All these are methods that people use. But the most common one that we use or we teach or train the people on that is used is a letter of credit. So I'm now going to tell you about how this letter of credit process applies, because it's common because it protects both the seller and the buyer. And this is how it works. So both the parties, both you, the exporter and the importer, you agree that you're going to be paid by letter of credit. It is agreed. And how is the letter of credit going to work? You instruct the importer, the other side, that people in Norway instruct their bank in Norway to open credit for you, the Ugandan, in favor of the amount of money you want. So the Norwegian bank of the importer instructs a Ugandan bank to open credit. Let's assume we're talking about Barclays Bank. The importer in Norway instructs Barclays Norway to open credit for you. So Barclays Norway instructs Barclays Uganda to open credit for you. That's the advising bank. The advising bank is Barclays Uganda. So the Norwegian guy gives the details of the documents you, the exporter, are supposed to provide. This is point 3. They give the details of the documents you're supposed to provide, for example, the bill of lading, the invoice, and all those documents, and the expiry date of those of the credit. Because a credit cannot be available for you to take even for 3 years. No, they'll tell you that you get that money between period X and Y. So the importer instructs the issuing bank that receive the money that he has specified. So you in the Ugandan side, once you get those documents, you go to Barclays Uganda, you finished all the processes of getting the documents, you go to Barclays Uganda, give them the bill of lading, show them the invoice and everything. Barclays Uganda goes to Barclays Norway and sends them that these are the documents we received. Please ask the importer to confirm them. Once the importer confirms those documents, They then say, okay, the Ugandan guy can be paid. So that is how the letter of credit works. And like I said before, it's a document process, that documents that verify that goods have been shipped and that you've done what you're supposed to do. So your Barclays Uganda will call you and say, oh, your payment is ready, come pick it up. That is how letters of credit apply. All this information here is what I've just said. So if you see like point 9, that bank will permit credit. But the whole process for you to understand is that it's document based, and you, the exporter, is supposed to send the documents to the importer. The importer receives the documents, then goes to their bank and authorizes the bank to make payment. Okay, I hope that is clear. I'll be ready to answer any questions in case it's not clear. So there are different types of letters of credit. Different types of letters of credit. There's the revocable and unconfirmed. Revocable means it can be cancelled and it's not confirmed. That one most people don't. That is because the importer cannot mind about it. Even if you mess up, they still have to pay you, and then they pursue you through courts of law for messing up. But number two, the irrevocable and confirmed is the most common, because irrevocable means cannot be cancelled, and confirmed means the money is there and it is confirmed, it is fully. The transferable letter of credit is one whereby you can transfer it to someone and someone else can get the money. You don't have to be the one to access it. I'm trying to rush through so that there's enough time for everyone to present. Contracts of service, I had someone mention their interest in services. The contracts of service are pretty much the same as contracts of goods, except here we're talking about supplying services. For example, medical services, or you are going to be a trainer, you're going abroad to train, or you're sending people to work abroad in Dubai and to do security jobs or other in America, exporting service basically. Now the law that contract of service supply is the same as a contract for employment. You, the exporter, enter into a contract with the other people in the other country that are interested in your services based on the terms that you agree to. There are no standard terms really on this contract of services. They're not like the goods, because the service contracts are person-to-person contracts, and the law cannot force. For example, if I wanted to go and conduct a training in Dubai, I'm supplying a service as a trainer, education. In case I change my mind to do that, because the contracts of services, especially professional services, they are contracts of employment and you cannot force someone to be employed. They choose to be employed. So they are both based on the terms that you agree to as parties. And the conditions or the terms are usually listed in what you agree to. Thank you very much. I'm ready to answer any questions.
Wow, thank you very much, Esther. Thank you so much for also presenting within your 30 minutes. That was quite fast. Esther still has a lot to speak about. You can imagine her topic is quite rich, but because of time, we can't have it all. Now, we have about 2 or 3 minutes, okay, 5 minutes to 10. And Esther requested that we have her questions now because she has to leave us. So like in the 5 minutes, we give we ask Esther questions so that she can leave after she has responded. So I hope that is okay with all of you. If there are any questions, kindly put them in the Q&A so that we have Esther responding. So there's a question from Hillary Group, and they are asking, thanks for elaborating on letter of credit. It's something new that we are negotiating with buyers, but how do we determine the type? How do we distinguish them? So Esther, that's the question we have in there for you. I don't know whether you can respond to that as we receive more.
Unfortunately, the question is not really clear. It's saying thanks for elaborating on the letter of credit. Is something new that they're negotiating with the buyer. So are they negotiating a new product? Maybe they speak in audio and I understand them better. How do you determine the type? The type of what? How do you distinguish them?
Okay.
Maybe
Okay.
they talk
I'll
and
ask,
I
Hillary Group, kindly unmute and ask your question. Hillary Group, are you there? Kindly unmute.
Yes.
Yes, please go ahead
Yes.
and ask.
There. Hello.
Hello, we can hear you. Please go.
I asked about the letter of credit. Yes, I asked about the letter of credit. It's something we are doing with the prospect. And my question is, how can you distinguish the features? Because all they told us was a letter of credit, and we have to use the banks both in Dubai and right in Uganda. And it's something that we've been doing, but I did not know all this information shared about the types of the credit, the different types. So who determines the type? Because she mentioned there are 3 types of them. There's irrevocable, there's non-irrevocable. So how do you determine? Do you have to tell the buyer this is what you're going to use? How do you come to that consensus of both which type to use as each one of you? I don't know if I'm clear, Esther.
Yes, you're clear. Now, the letter of credit, whether it's revocable or irrevocable, that is something you agree with. You agree with the importer. Because remember, you're negotiating. And it is listed on the bank will tell you, your bank here will tell you that they actually, this is a type of letter of credit they took out. Most of them are confirmed and irrevocable, but just ask to make sure. Because if you don't, they can easily play you and you didn't know. So there's no harm in asking, but it is a negotiation. You're the one to dictate the terms. Because remember, if it's irrevocable, should they change their mind the goods have an issue, they're in to pay you. And should the bank refuse to pay you, you can sue the bank if it's irrevocable. Because there's a principle, okay, I skipped it. There's a principle that is called strict compliance, you know, whereby actually autonomy, let me show it to you briefly, which says that banks are under doctrine of autonomy. Let me share my screen again. This doctrine of autonomy that you see, it says that even if you mess up, the letter of credit process is very separate from the process of the contract, of the supplying of goods. So once you have supplied the goods, even if you've messed up somewhere, you are supposed to pay you. Should they refuse to make payment, you can sue the bank and you can sue the importer. So you have to find out.
Okay, thank you very much for that response.
Throw some light on the extracts.
Sorry, Esther, I missed that.
No, I was just saying that there was another question on that. Can I throw some light on the ex-works?
Let's go ahead with that one.
Ex-works to a named plot of destination. Here, ex-works means that you, the exporter, I hope it's clear here. It means exporter, you're placing the goods at the disposal of the importer at the agreed place, like your own premises. You're saying that the importer, the Norwegian guy, is supposed to figure everything out and get his guys to pick the goods from your warehouse. That's what ex-works says. So it's really that you're not doing anything beyond them coming to your doorstep to pick up the goods. That's what ex-works is all about. Any more questions? Over to you, Brenda.
Okay, Thank you so much, Esther. We greatly appreciate. Our dear participants, we will share that presentation with you. So if there's anything else that you haven't picked, you'll be able to get the notes of what Esther has been sharing. Esther, thank you so much for your time. We fully appreciate. In case there are any questions after this, we shall be able to contact you, and you can probably respond and send them back to us. So with that, now we get into our next presentation. And our next presenter is Stephen Mwesigwa. He is the MD of Maisha Integrated Holdings, and he will be presenting about preparation of financial reports and their importance for export business. Stephen, are you with us? You can now unmute and start your presentation.
I am with you.
Thank you very much.
Good morning, everyone. I will try to share my screen just now. Is it clear?
Yes, it's clear. It's clear, Steve. We can see it.
Okay. So good morning, everyone, once again. I want to just run you through the financial reports and the importance in the export business or export process. And just very quickly, this will be the agenda we shall follow. Just give you a bit of a brief about myself, talk about financial statements, talk about the export process, and then we'll talk about building trust in the export process. The previous speaker, I think, has spoken a lot about the legal aspects of it. Mine will be to tie this and say, so how do you build trust in this? How do you get someone to even get to the point of wanting to issue with a letter of credit and the like, and what is the importance of financial statements in this process? We shall then conclude and tell you a bit about what we are seeing in the market from exporters and why it's important that some of these habits change quickly. I'll try to run all this within the time allotted, which is 30 minutes, just as that I will finish before, because a lot of the technical aspects of preparation of financial statements cannot be covered within 30 minutes. So mine is to tell you more about an introduction and tell you what you need to be doing. Over the process, as is my nature, I normally will pause and find out if everyone is with me, because these presentations, you can lose someone at the start and not pick up with them later on. So very quickly about myself, I've been at this for about 18 years, consulting, banking, manufacturing, and project management. I'm now a full-time consultant, and I specialize in finance function effectiveness and strategy. But previously, I worked with PwC, I worked with Bank of Uganda, with ABSA, I worked with Barclays then, and most recently with Movit Products as CFO. And in education, I'm an accountant, and I did BCom and have a master's in strategy. So going on quickly, I'll talk about financial statements, and I'll try to keep this as simple as possible. I'll apologize to the accountants in there because it's really a very, very basic discussion, but that can get very complicated. I know that recently we had an interesting discussion about a complicated subject on intangible valuation, but this one is an introduction, so it keeps it very simple and introduces the things that you probably would need to start looking out for as business owners, as exporters. So as a business owner, you're constantly asking yourself questions. What is your business worth? Yes. How much money do you generate? Where does this money come from? Where does this money go? Is my business growing? Is my business efficient? And very many more. If we are having a face-to-face, I would have asked you, and which others? Because you ask yourself so many things about business. The principal reason why you open a business, obviously, is in the real financial world, you open a business to build wealth, but in simple terms, you open a business to make money, yeah? To turn 1 shilling into 5, to turn 5 into 10, and turn 10 into 20, and so on and so forth. And oftentimes, to reach that place, you have to invest significantly in your business. You have to put what is known as capital in your business, yeah? And oftentimes, you run these businesses for a very long time, and you're not even sure whether the capital that you have put in has been recovered or not. I'll give you a very good example for the farmers on the forum. Oftentimes, many people will say, I bought some land, I put some avocado on this land. I'm now getting the avocado out of this land and I'm maybe selling it or exporting it. But very few of them actually go back and say, but is this a profitable venture that I'm doing? And profitability, of course, is just one aspect of it, but by keenly looking at your financial performance, you can actually start saying, are there improvements I could be making in how I'm running my business? So the discussion on financial statements is really about that, is to say, why is it important to start thinking about financial statements? How do they play into this value chain of the export process? Where are the common pitfalls that we see, and what could we be doing to mitigate them? So the financial statements I'll be talking about, as I said, I'll just build it up from the start. I do not expect many of you to be accountants, but I'm always happy and willing to have detailed discussions with you to see how we move such discussions, such conversations forward. So there are 4 financial statements, but for this discussion, I'll talk about the 3 main financial statements. The first financial statement is a profit or loss statement. Yes. Now, a profit or loss statement, it's a statement that shows whether your business is making a profit or loss. Yes. So it shows income, it shows your expenditure, and it makes a conclusion on whether the business is making a profit or loss. The second financial statement is what is called a balance sheet. A balance sheet is a summary, it's a snapshot of your business. It shows your assets, which are the things that you own, the things that you use to generate money. It shows liabilities, which is the items that you owe to other people. And it shows the capital, which is the amounts of money that you have initially started a business with, or the retained earnings you have from the business. Now, a balance sheet, as the name goes, must balance. And that's the second and very, very important financial statement. The third financial statement is called a cash flow statement, or a statement of cash flows. The statement of cash flows shows 2 main things. It shows you where your cash, and cash flows, you're talking about cash. Yes, so items which are money, whether money is in the bank or money is in physical form as cash. It's talking about your sources of cash, your uses of cash, and the net cash of the company. So, for example, if you're a business that is just starting up, chances are that you'll be utilizing cash. And because you're no longer not selling anything, the source of that cash is going to be mainly from capital of the business owner. For a more mature business, the sources of cash are going to be from sales. Now, these sales are also going to be utilized, and the uses of cash you see on those businesses are going to be mainly in costs and also in reinvesting in the business. Yeah. So these 3 financial statements are the ones that we shall be talking about. Now, to bring everything together, I want to talk about the export process. And I thank the previous speaker for that detailed and elaborate discussion on the process and the legalese and how it all ties together. I picked this from the Export Promotion Board. This is readily available on the website. And it broke it down into 6 main stages. The first stage was readiness, where you register your business, you open a bank account, you select the product you want to be working on or service, you select the market you'd like to export it to. The next one is a market identification process, which UEPB is more than willing to support. And it's a connection between importers and exporters. And you can also deal directly with the importer. You can go to trade fairs and export to identify the market you want to go through. I was happy when one of the speakers talked about going into Dubai. So that means they've already done a market identification. Then there was the contract signing, and the previous speaker spoke extensively around that, where you get into contract with someone, you sign a contract, you do a purchase order or make a business offer. If samples are required, you do that, and then you confirm a purchase order. The fourth stage is the actual preparation for export. And again, I had the previous speaker talk a bit about that, entry requirements, grading, labeling, and a lot of logistics. So I had her speak about cost insurance flights and free on board and things like that. And it was quite a rich discussion. The fifth stage is the documentation and transportation, where you get the quality certificates, certificates of origin, and a very, very important bill of lading, which all leads to a sixth stage of invoicing. You're invoicing whoever you've exported to, and you're hoping to receive payments. And the entire process is a value production process where you're trying to transfer goods or services, and in return for those goods or services, you're trying to get money back. So that's the process. So in this process, I just wanted to highlight some parts which I've put in red. The first part is the bank account. There you are dealing with a bank. The next one is when you're identifying the importers, again, you're dealing with a third party. When you're dealing with the Export Promotion Board, again, dealing with a third party. And there's a reason why I keep bringing out all these parties that you're talking to. The fourth one is when you're doing a contract negotiation, and when you're trying to get a business order and an order confirmation, you're again dealing with another party. When you're trying to fulfill entry requirements, you're again dealing with a third party. When you're trying to get the bill of ladings and the quality certification, you're dealing with another party. And at the end of it all, when you're trying to receive payment, you're dealing with another party. Now, the point I want to raise here is all through this process, you're dealing with risks. You're dealing with two parties that do not know each other. So you, the exporter, do not know the importer. The importer on the other side also does not know you. The banks do not know you. UEPB does not know you. Yes. So, and I'm talking around a novice exporter, someone starting out. You're trying to build trust in this process. Now, because there's a bit of trust issues, is where you hear the previous speaker come in and say, oh, here you need to have this document, here you need to sign this contract needs to be in place, and so on and so forth. But even before these items are in place, a question will come about that if I was trying to look at you, if I was a company out of Dubai, and I was trying to look at a company in Uganda and understand what they're doing. Yes, you've told me you can bring me some meat, you told me you can bring me some avocado, and so on and so forth. But I want to understand, am I dealing with a genuine company or am I not? Typically, what I will do is go back to these financial statements that I talked about. So independently and competently prepared financial statements help to build trust between the presenter, the person who has prepared the financial statements, and the reader, the person who is reading the financial statements. And I'll tell you why that trust is important as we go on. So before I do that, I'll again do just a small pause and ask, are we following? And one person confirm whether we are following, and then we continue.
Yes, we are following.
Yes, we are following.
Fantastic. So these three sets of financial statements, the aim of these financial statements is to communicate, to build some type of trust between two sets of parties. And the assumption always is that these have been prepared very well, and they've been prepared competently and independently. So when I tell you that I'm a business that has been in operation for 5 years, and you tell me, oh, give me your financial statements for 5 years, it's not an unfair question, yes? It should be something that is being done every year, by businesses. Unfortunately, what we find, and I'll conclude by saying that, is a lot of people approach financial statements on a need basis. So I need financial statements to do something. So I need to look for an accountant to do financial statements, and I need to dig up records and so on and so forth. And by the end of this discussion, I'm hoping to have turned that a little bit to say, no, this must be a normal process. Yes, in fact, you get more value from financial statements, even if you are not an exporter. You get more value from reading your own financial statements because they tell you a lot of good information. Yeah. So when we're still building onto this discussion we're having on how do you build trust? Yes. Now, two main parties came out from the previous speaker, and I'll add on to them. You have an exporter on one side, you have an importer on the other side. Yes. These two sets of people have trust issues. And what you had everyone talking about is it's actually a trust issue. Two sets of people, they do not trust themselves very much. They do not have enough information very much. In fact, they do not trust themselves very much because they do not have enough information about each other. So they also have quality issues. People are not ready. Are you actually going to fulfill what you're saying? So oftentimes they go one step down and they say, let's get some type of security. And if you had the previous speaker, they were talking about one form of security, which is a letter of credit, which is organized by two banks, Bank A in Uganda and say Bank B in Dubai. And Bank B is going to promise to pay Bank A an amount of money X upon Bank A fulfilling conditions, which Bank A then comes back to you and says, even you must fulfill these conditions, and there's a contract covering that whole process. Sometimes that security is in the form of an insurance contract to say you're going to undertake to do these types of insurance. Now, all through this process here, you'll find that there is a lot of leverage, and you're going to people like banks and you're saying, would like to organize a letter of credit. Would like for you to give me some type of export loan, some type of guarantee or cover. Yes. Now, once each of these items come in, the trust issue that I started with comes back. The bank is talking to you. Yes, we know you very well, but we do not trust you enough. We do not trust you enough. So you need to tell us a little bit of some things that can help us build our trust in you. So financial statements again come in to serve this purpose. For example, there are 5 main things that are looked at when you're trying to build trust between two parties that do not know each other. These are normally called the 5 C's of credit. These C's are a review of your character, a review of your capacity, a review of your capital, a review of your collateral, and a review of the conditions at play. So whenever two parties do not trust each other, I may even say even in a marriage, but that may be taking it too far. They check these items, they check those 5 C's. Now these 5 C's can also be checked, or they are very, very easily checked by looking at financial statements. And that's why it's important for people, for businesses, for exporters to get into the habit of doing financial statements, not on a need purpose, but on an annual and ongoing purpose. So for example, if someone wanted to check your character, yes, they're trying to say, is the person I'm dealing with a trustworthy person? One of the statements they can look at is your balance sheet. Yes, if I look at your balance sheet, then I can very quickly say, for example, are there long outstanding payments that you have not made to your suppliers? In the other way, I can also say, have you taken loans from banks that you have not paid back? Now I'm trying to understand your character, and I'm doing it by looking at financial statements. If I was trying to understand your capacity to contract with me, I would again go and look at your profit and loss statement. If I looked at your profit and loss statement and I saw a business that was, for example, heavily in loss or had volatile earnings, I mean, 1 year it's positive, the next year it's negative, 1 year it's positive, the next year is negative. Then I would say, oh, but I'm not very comfortable to deal with this party. If I also looked at your balance sheet and I saw, oh, but this person is heavily indebted, they may not be able to contract with me and fulfill the obligation. I would again be looking at your financial statement. The third C that I know that normally two parties that do not trust each other look at is the C of capital. And when they look at your capital, they're trying to say, do you have enough capital to enter into a transaction with us? Yeah. Now, obviously, there are two types of capital. There is debt capital and there is equity. And obviously, when you have a position that has so much debt, people start getting a bit anxious. The fourth one is collateral. And by looking at your balance sheet, I can say, do you have assets that you can stake just in case the deal went bad, in case it did not go as planned? And the last one is the conditions, which is, can you actually meet the conditions of the letters of credit, the conditions of the export guarantee? Now, my point in bringing all this out is to tell you that all the information required to build trust between two parties, between you and the importer, between you and the bank, between you and the insurance company, between you and the shipper, can very well and very easily be found on your financial statements. So it's not a very unusual requirement for you to go and ask a bank for an export guarantee, for a letter of credit, for a loan, and they in turn tell you, show us your financial statements. Now you'll be at a large disadvantage if you have not taken the time to prepare these financial statements and you're doing them fit for purpose for the first time there. Yeah, and that's why it's a good practice to have financial statements ready way before, because even if the question doesn't come up, there's a lot of value you can get from looking at your financial statements. So I'll talk a bit about the uses of the financial statements. I want to talk about the uses of the financial statements. Balance sheets. So balance sheets are a very, very important financial statement. Yes. When you look at a balance sheet, you can identify a lot of risk in a business. Now, I tell you this because if you're talking to a bank and they ask you for your balance sheet, they are looking at it to identify, to understand your business to a level that, can we understand the risks that are in that business? And what type of risks are there? There could be risks in your capital, which is you, for example, have so much leverage, so much debt. There could be risks in your liquidity, which means you're spending more money than you're bringing in, which means you're not collecting your debts, which means you're not paying your suppliers. There could also be an insolvency risk, which is this business, if it continues how it's performing right now, will be out of business in the next 2 to 3 years. You can pick all that by looking at your balance sheet. On the profit and loss statement, you can use either a vertical or horizontal analysis to understand the strength of earnings. And when I say vertical analysis, I'm talking about looking at the profit and loss statement from the top to the bottom, from the sales all the way to the net profit. When I talk about horizontal, I'm saying I can compare a financial statement between 1 year and another and say this business, their sales are growing, their sales are not growing. The third financial statement is a cash flow statement. And by looking at your cash flow, you can actually assess and say, is there a cash flow risks in the business? Now, a cash flow risk in a business is a business that continuously uses more money than it generates. Yes. And an easy way to do that is to say, is this business constantly being recapitalized? Constantly being recapitalized. I keep giving an example of a farm that very few of us ever go back to see whether your farm is making money. You just are happy when you sell your first batch of avocados, as an example. But oftentimes you have to go back and say, but how much have I put in this business? How much have I kept on recapitalizing it? And actually, do the numbers make sense? Because every time you recapitalize the business, you're actually getting money from somewhere else. And that money has in finance what is called an opportunity cost, and you're putting that money into the business. Yes. So to conclude my discussion, my little conversation with you, the key use of financial statements should be business owners. It should be the people on this team. Yes, it should be the people listening in. But oftentimes we find that financial statements are just built for purposes. Now, if you only build financial statements for a particular purpose. You want a loan, so you build financial statements. You'll be missing three main things. Number one is that you lose sight of your financial operations. A lot of people, actually, they think they're making money in a business, and they're already shocked when, you and I read the same newspapers. On the outside, you're saying, I thought that was a big supermarket. How can the bank be taking its business? Yes, but these are people normally who do not give enough insight to financial statements. They invest before they analyze, for example. They do not look at the quality of their earnings and so on and so forth. The second thing that you lose out by not doing your financial statements is that you take too long to identify business risks. Oftentimes we go into a business to help and the problem has already become so big. And the problem has become so big because on a regular basis, you do not take time to look at your financial statements. And the third one is that the options for efficiency are never harnessed. Once you look at financial statements, you can very quickly say, but I'm investing in A, the return is 10%. I'm also investing in B, the return is 20%. So why am I continuing to invest in A? I could very well just invest in B and maybe increase my return. So I want to conclude by saying that business owners must get into an important habit of maintaining financial statements because of the value that is enclosed in these financial statements. And whether you're an exporter, whether you're an impending exporter, along the way, you're going to be requested for financial statements. The easiest that is going to ask you for a financial statement is going to be the bank. And the worst thing that you do is build what is called a fit for purpose financial statement. When the bank wants financial statements, you run very fast to Wandegea, you get some accountant, you give him some records, and you go to the bank and you say, here are my financial statements. Banks employ people who are very competent at analyzing these, and they'll very quickly be able to tear them apart and say, I am sorry, those financial statements do not make sense. So I will stop there for now. I have about 4 minutes to go, and I'll use the time to take in some questions. Those are my contacts in case you need to get in touch with me. Thank you very much.
Thank you very much, Stephen, for that in-depth presentation. And I think one thing that we fully appreciate is that financial statements or putting together our financial statements is a good business practice. So it shouldn't be a fit for purpose kind of thing, but we should do it to make sure that we are actually running our businesses properly. We understand what we are doing. And I think one of the things that I also picked from what Stephen showed us is that many of us as business owners normally do not understand what the accountants are doing. And from what Steve has explained, he really has brought it out properly on how and what these statements mean, so that even a lay person can actually understand what it means and how you can interpret any financial statement. So Steve, thank you so much. You are requesting that we have your questions coming in now. I will give the 2 minutes to you so that we can have questions. Steve, thanks for the presentation. We don't seem
You're most
to have...
welcome, but I will also stay on the call just in case the question come in later.
Okay, great. So we don't seem to have any questions for Steve for now. Let's pack it, whatever it is, for the Q&A session. Steve, we really appreciate that. We appreciate your presentation. Now we go into our next presentation. It's exactly 10:30. Today's presenters have really been good at time, and we thank you so much. Now we go into our next presentation, and it will be by Willie Mutebi. Willie will be speaking to us on export incentives for exporters. Willie is an officer with Uganda Revenue Authority. Willie, you can now start your presentation. Willie, you're welcome.
Oh yeah, Brenda.
Okay, thank you very much.
Can you hear me?
Yes, we can hear you.
Yes, morning everyone. My name is William Tebi from URA, Customs Department, specifically from the Trade Division, Tariff Unit. This morning, I'm here to share with you the various incentives that are available for exporters. You can see the PowerPoint. Hello?
Yes, Willie, you can go ahead.
Oh yeah, thank you. I don't know how much time I have.
You have 30 minutes.
30 minutes. Okay, thank you. I had prepared some background,
Willie,
but
are you
in the
okay?
yes, I'm okay. There is some background I put up here, but for the interest of time, let me go straight to the incentives. Oh yeah, there. First of all, to give some brief URA, we are mandated to collect government revenue, and from the customs side, we deal with international trade. We facilitate international trade. We collect revenue on imported goods and some few items that are exported. We are under Ministry of Finance. We implement what the Ministry of Finance has decided. We don't make these policies. We don't make laws. We don't decide on what items to pay tax and what not to pay tax. But we implement what the ministry has decided for us. Now, on the side of exports, all exports do not attract levies, except for few items. One of them, the unprocessed leaf tobacco, which is charged a levy of 0.8 per kilogram when consigned out of Uganda. Smoked, salted fresh fish at 0.05 per kg and 0.02 per kilogram for Mokene and Nkeje type of fish. Unprocessed hides and skins are charged a levy of 0.8 per kilogram. Next slide, please. The other incentive we have is a facility for manufacturing under bond. Under this facility, all inputs, raw materials, and machinery imported for use in the manufacture of goods for export are exempted from tax. We also have export processing zones, or EPZs. Inputs, raw materials, and machinery imported for use in the manufacture of goods for export for export. The requirement here is that the manufactured goods, you have to export 80% of the product you produce. Next slide, please. We have packaging materials for packing goods for export. They are exempted from taxes in accordance with the 50th schedule, Part B of the East African Customs Management Act 2004 as amended. We have a VAT deferment facility. The VAT deferment facility is provided for under the VAT deferment regulations 2013. Deals with imported plant and machinery, where the value of the plant and machinery is at least 22,000 $300 US, or the value of the VAT you want to defer is at least $4,000 US. You must be a registered taxpayer for VAT to enjoy this facility. We have another incentive for industrial replacement parts imported by registered manufacturers. Replacement parts are exempted under the fifth schedule, Part B of the East African Customs Act 2004 as amended. Here, replacement parts mean let me explain something. We have scenarios where people import machinery together with some replacement parts. But okay, they call it, most of the time they call them spare parts. But this provision is for industrial replacement parts. The meaning here is that you have a part of a machinery, of a machine you have been using in your facility, but part of it has been spoiled and you want to replace. When you import those parts, they are exempted from taxes. Those that we import along with the machinery, they are not exempted from tax. Next slide, please. We have refrigerated trucks. Refrigerated trucks, they are exempted from taxes under Part B, fifth schedule of the East African Customs Act as amended. Basically, these ones are mostly used by people transporting perishables, like flowers, fresh vegetables, and so on. They are exempted from tax. We have goods carrying vehicles with gross vehicle weight exceeding 5 tons, but not exceeding 20 tons. Import duty is at 10% instead of 25% for 1 year. This is done each year, so it's at 10% instead of 25%. We have commercial vehicles of with gross weight exceeding 20 tons. This one is free of import duty for 1 year, but VAT is payable. Even the previous one, VAT is payable. The difference here you have to note is the motor vehicle gross weight is what is targeted to reduce the import duty rate. We have this is under domestic taxes, where exports are zero-rated supplies. All items that are manufactured here and they are meant for exports, they don't pay VAT. Another issue is on international transport of goods and services. They are also zero-rated supplies. Next slide before. Now, I have some facilities I've mentioned up there. If you want to enjoy these facilities, for example, if you have imported packaging materials meant to pack your goods for export, you're required to make a formal application to the Assistant Commissioner Trade, sitting on 10th floor, the new URA tower. Your application, you accompany it with import documents, which may include commercial invoice, packing list, bill of lading, airway bill, to help us vet the eligibility of your application to enjoy the facility. Even most of the other facilities, you have to make applications, request for tax exemption. One thing I need to note here is that we have scenarios here where people make applications requesting for tax exemption or requesting for tax treatment on their imports after they have already made the import. I would like to urge you, participants, in particular, this time around exporters, if you plan to make any import for your business and you don't know how it's going to be treated, how much tax it's going to pay, whether it is exempted or not, make an application. If you have, for example, if you have gotten a pro forma invoice from the supplier, the machine that I've talked about, for example, machine that I've talked about the value, you have got a pro forma invoice from the supplier, you write to the commissioner requesting for tax treatment of those imports. They give you advice in advance before you make the import. By the time the import is here, you know how much you're going to pay, and you prepare yourself in advance for the final declaration. I'd like to thank you so much. That was my briefing presentation in regard to the incentives we have currently as the URA, people who are in the export business, which they can utilize to boost their business. I welcome most specifically proposals, especially exporters, the proposals you may have there regarding tax. I'll be glad to hear proposals where you want changes, where you want more support. We don't make the final laws, but we may have an input in the proposals in the budget. So you never know, you may propose something, it's forwarded to the ministry, and you never know, it may go through, and it becomes a benefit. Thank you so much.
Thank you very much, Willie. We appreciate that presentation on export incentives. And like Willie highlighted, it's important that you seek advice before you import some of what he was highlighting, especially if it's in regards to your export business. But he also highlighted a number of incentives and where we can actually access them. Now, Willie was supposed to conclude at about 11, so we still have some, few minutes. And Willie, if it's okay with you, we can take just a few questions and then we proceed.
It's okay, very okay.
Okay, Jacob, we probably will need to ask this question verbally, because you were saying, what do you mean by 1 year? I'm not sure whether that, whether Willie will understand exactly what you mean. Okay, go ahead, Willie, if you understand it.
Oh yeah, I get this question very well. Those incentives were violated 1 year. We have different arrangements for different incentives. Some are under duty remission. We have a duty remission scheme whereby we ask for those incentives for every financial year. So we keep asking for every financial year. If we don't ask for that particular year, then for that year, the incentive will not be there. But we keep maintaining the list and we keep requesting for those exemptions every financial year. We ask for those incentives are gazetted, they are sent to the ESC under the ESC East African Community. Those are the ones who gazette those incentives. That's why I say for 1 year. That's why I mentioned that you need to be updated, because you may, for example, look at this, what I've put up there, especially on those transport, the goods carrying vehicles, and you just import without prior knowledge. By the time you import it, we have the facility is no longer there. It has changed. That's the most important thing on that issue of 1 year. So we keep asking them for every financial year. But some are permanent, like those ones I've mentioned in the 5th schedule, Part B of the East African Customs Act. Those exemptions are permanent. We don't keep asking for them every year. But where I've mentioned every year, they are for every year. You ask them each year. Thank you.
Okay, thank you very much, Willie. Let me check if we have any other questions for Willie. I have a simple question. This is, sorry, let me take Lydia's, which came in first. Please inform members that it's important to get a clearance of equipment from UNBS. People only think about URA, and yet there is UNBS levy if pre-import inspection is not done. Okay, thank you for that, Lydia. Willie, I don't know whether you want to say something about that.
I can comment something, but as she has said, these are independent institutions. Our role as URA is separate from the role of UNBS. When we finish our part, UNBS can pick from there. So we don't enter into UNBS responsibilities. Thank you.
Okay. The next question is from Rogers, who says, I have a simple question on half-processed coffee, fair average quality, FAQ, sold to exporters. Does this attract VAT or not? Normally, this is an output from Halas. Willie, over to you.
Can you come again?
This question is half-processed coffee, the FAQ, fair average quality, sold to exporters. Does this attract VAT or not?
What does it mean by half-processed coffee? We don't have half and the quarter or full process.
He says it's the one that is out of Halas, normally after Halas.
The issue is it processed. The level of processing may not be an issue, but is it processed? If VAT is on processed coffee, then it will attract VAT. It doesn't matter whether it is half or full. The issue is it processed. The catchword there is it processed.
Okay. So Rogers, I hope that answers your question. We have a question from Pora. Mr. Willie, where can one find this information in case they want to read about this? Also, is it possible to share your contact information?
Yes, thank you so much. I've shared my contact on sorry, you didn't. I was trying to share my updated presentation on that. Yours, I sent you yours. Mine, I sent you earlier, but I'd updated on mine when I was trying to share. But you can access that information on our website, www.ura.go.ug. You go to topics A to Z. When you open the website, there are those links, but there is where those topics A to Z. You will find a full tax incentive guide for Uganda. It will have everything there, everything that is exempted from tax. This one I picked only that is relevant to exporters, but the incentive guide for Uganda has a full list of all items that are exempted from taxes.
Very much. Willie, you'll probably type your contacts in the chat, and
okay.
you'll share the updated presentation, then we can share it with our participants. There's one more question from Caroline. She says, thank you for the presentation. Could you please give the email or contact address of the Assistant Commissioner of Trade so that we can present our application?
I can share, but the applications you you can send an application via the customs help tool. We have a customs help tool. When you go to Google, you can type in the customs help tool. It will request you to create a password so that you can log into that link. You can put your application there. The other option you have is to bring the application to URA at our new building. The commissioner ideally does not receive applications. As the commissioner, we have a process of how documents come in. But I can share the contacts if you maybe want to contact the assistant commissioner direct, or you want to slot in an email. But for the applications, I suggest that we use those facilities. You can bring the application physically here at our reception, at our main reception. There is a process that goes through until it reaches the commissioner. Then you can use the customs help tool if you don't want to bring a physical application. Thank you.
Okay, thank you very much, Willie. So for all those who would like to send the application, Willie has clearly explained where you can send that. Willie, thank you so much. Please put the contact details in the chat so that that all the participants can be able to access that information. So with that, we will end the question session for Willie. Whatever other questions, we will take them during the Q&A session. Okay, so ladies and gentlemen, we're getting into our last presentation for the day. And allow me to introduce our last presenter, Rosette Bamwine from Bank of Uganda. She will be handling how and where to source funds for agriculture and agro-processed exports. Rosette, you're very welcome, and I'm sure the fact that you're based in Bank of Uganda, your source of funds will not only be specific to those areas, but for all other exporters, because we have a diverse group in today's training. They are not only from the two sectors. So you're very welcome, Madam Rosette. You can now unmute and at your presentation.
Thank you, Brenda, and the team. Good morning, all participants.
Good morning, Rosette.
Sorry?
Maybe you can be a bit louder. You're a bit faint.
Oh. Hello, can you hear me now?
Yes, we can. We can hear you, madam.
You can hear me?
Yes, we can.
Okay. Thank you very much. I'm glad to be here today. And I commend the Export Promotion Board for the support you give to our farmers, agro processors, the grain traders, and the economy as a whole. So I'm glad today to share with you on the topic, how and where to source funds for exports. Let me share my presentation, please. Okay, I hope the screen can be seen.
Yes, madam, we can see the screen. Maybe you give it a full view.
Sorry, can you see it, Brenda?
Yes, I can see it. Just give us full view.
Okay, thank you. The outline of my presentation will be the agriculture sector, exports at a glance, funding, and the like. So I'll begin with the agriculture sector and exports at a glance. As you are aware, agriculture is a key pillar of the Ugandan economy and accounts for approximately 23% of GDP, and 87% of the working population is in rural areas and are engaged in agriculture activities. Agricultural products account for the largest portion of the Ugandan exports, constituting 80% of total exports. The chief exports being coffee, 22%, followed by tea, cotton, copper, oil, and fish. Uganda main export partners, Sudan, Kenya, DRI, Congo, and I believe you have more information on this that you share. Exports are in the final stage of the agricultural value chain and are mainly exported, in the agricultural value chain, and is one of the key development strategies under the National Development Plan (NDP) is agro-industrialization, which resonates with our goal of value addition and support to the exports and aims at increasing commercialization and competitiveness of agricultural production and agro processing. However, in spite of the above key factors, most financial institutions were initially unwilling to support or advance credit to the agriculture sector or the agricultural value chain as a whole. It is against this background that the government of Uganda, in partnership with the financial institutions, established the agricultural credit facility that supports almost the whole agricultural value chain, including the export bit. So, funding for exports. The loan facilities for exports available in various institutions in Uganda that includes one, the Agricultural Credit Facility administered by Bank of Uganda, the Uganda Development Bank, the commercial banks, the credit institutions, the micro deposit taking institutions, the SACCOs, and other institutions and NGOs that all support agriculture lending. So now I'm going to inform you about the Agricultural Credit Facility, especially the fact that it supports the whole value chain almost, apart from a few items that I'm going to mention later. The SCF, or short for Agricultural Credit Facility, is a risk-sharing public-private partnership between the government of Uganda and the participating financial institutions. It provides medium and long-term financing to projects engaged in agriculture, agro-processing, and the grain trade at more concessionary terms than what is offered in the financial sector. The SCF finances all projects along the agricultural value chains that include the SMEs and large-scale aggregators, the youth and the women, as well as the exporters of agricultural products. How is our structure like? The government is in the center because the scheme was initiated by the government of Uganda. And then we have the commercial banks, the UDBL, the credit institutions, the deposit taking institutions, and all for providing financing on long-term, medium-term, and short-term basis. And Bank of Uganda acts as the fund administrator. How is this scheme administered? What are the terms and conditions under the SCF? The maximum loan amount that we can give to a single borrower, meaning company or an individual, is 2.1 billion and 10 billion for the grain facility that really falls mostly under the exporters. But this 2.1 billion can actually be increased to any amount based on each individual basis, on a case-by-case basis, based on the value and to the economy. The maximum loan period is 8 years, and for the grain facility, it is 2 years. We also give a grace period of up to 3 years, though under the grain facility, we don't give the grace period. The minimum loan period is 6 months, and the maximum interest rate is 12% and 15% for the grain facility. The facility fees, whereby maybe processing and the like, fees charged for processing is 0.5%, of the total loan borrowed. And the government contribution in all this is 50% for all other loans along the value chain, and for the commercial banks and the Uganda Development Bank. And then 70% contribution if your application goes through a credit institution or an MDI. The reason being that most of the the tier 2, tier 3 commercial, that is financial institutions that include credit institutions and MDIs, they did not have enough liquidity to lend to this very important sector. And that's why the government opted to give 70% on this part. If the loan goes through such institutions, the government will contribute 70%. But commercial banks and the Uganda Development Bank, the contribution is 50% per annum. Sources of funds under the SCF, you have heard, are contributed by the government of Uganda and the financial institutions, as mentioned above. What can be financed under the SCF? The eligible activities under the SCF, just a minute. The eligible activities under the SCF include all activities under the agricultural value chain, all activities that lead to the final step of exporting. And these include acquisition of agricultural machinery and equipment, any machinery for commercial farming, any equipment that may be required under this value chain, we finance it. Post-harvest handling equipment, storage facilities, cold storage, cold trucks, warehousing and packaging materials, agricultural inputs, e.g. pesticides and fertilizers, land opening, paddocking, bush clearing, irrigation facilities, water dam excavation dams, biological assets like banana suckers, fruit seedlings, chicks and livestock for stocking the farm, among others. All these are eligible or are financed under the agricultural credit facility. Also, agro-processing facilities that include machinery and equipment, especially the big machinery for sorting out the grain, for agro-processing, for processing and packaging for export. All these are financed under the scheme. Working capital does not exceed 20% of the total project cost. And this includes the farm labor, machinery installation costs, hire of specialized machinery for farming activities, among other activities. Freight charges can fall under working capital, where we can give you 20% of the exporter's freight charges. And then other exporters can benefit under the provision of packaging materials, provision of purchasing of the goods, agricultural products for exports, the cold storage chain, the trucks, and the like. We have what we call block allocation that allows the financial institutions to extend loans of up to 20 million Uganda shillings to farmers and agro-processors using alternative collateral arrangements. Most of our farmers, most of our beneficiaries that are small scale, who are actually the majority in the country, were not accessing loans or credit due to the fact that collateral requested for would be over and above what they could afford. And that's why the partners under the SCF decided to introduce this 20 million fund to specifically support the micro borrowers, the small scale borrowers. And the loan, the collateral could be alternative arrangements such as chattel mortgage, character-based loans, cash flow-based loans, anything, name it. You can give it and access this 20 million loan under block allocation. And most people are very happy with it because the small scale farmers are actually benefiting. And then as for the exporters, right from the beginning where you are in the field, if you're just buying and you are not producing, we give you funds for the trucks. For example, the sugarcane trucks, the tea trucks, the heavy load trucks, we can finance them. And also companies that have outgrower schemes, like the tea schemes and the sugarcane. If you want to support your outgrowers, you can also borrow under the SCF and then at more concessionary terms than usually available on the market. What the SCF does not finance. What the SCF does not finance include purchase of land, planting of trees, financing an existing loan facility. This means like if you want to borrow a loan and you are failing to pay, you cannot borrow under SCF to pay such a loan. Trading in agricultural commodities with the exception of the grain. Other freight charges and cargo handling above 20% of the total project, we can also not finance it. But the grain trade is financed because we support bulk purchase of the grain, warehousing. If you want to construct a modern warehouse, anything concerned with the grain trade and export and packaging, we finance it under the SCF. And then the collateral requirements, apart from the block allocation I mentioned, the rest is primary security, is machinery and equipment, financed where applicable, and any other collateral as deemed fit or necessary by the participating financial institutions. How has the SCF performed since inception? We started in the year 2010. 2009 were initial documentation, but since 2010, the dashboard, you can see it, GOE contribution is 294 billion, and we have actually financed a total of 581 billion to 863 projects along the agricultural value chain. All these have been financed. And if I may look at the particulars of our financing, you realize if you look at the charts I'm providing, one, on farm activities that include most of these activities, whether for cattle, for poultry farming, and the like, it comprises of 26%. Agro-processing, that falls mostly under the exports bit, is 26%. And then working capital for the purchase of grain. The grain trade actually has taken most of the funding under the SCF scheme, comprising of 38% of the total loans given out. And then post-harvest handling. Post-harvest handling, this one includes the modern warehousing, the silos, and any other thing concerning post-harvest and storage facilities. We have financed 9%. And then 1% has gone to livestock, but it is also increasing. And a total of 624 billion has actually been approved for loans in approvals, that include disbursements and commitments, whereby we have approved and given offer letters, but not yet disbursed the facilities. The performance, indeed, at a glance, you have seen it. Since the year 2010, when the SCF commenced, the loan book has actually grown from 21.2 billion to 581 billion in cumulative disbursements, extended to 863 eligible projects across the country. Out of this, the government has contributed 294.96 billion, while the financial institutions have contributed 286 billion. So you can see it's a partnership indeed. Both the financial sector, institutions are contributing, as well as the government of Uganda. The block allocation, I've mentioned it. It actually has been a blessing, especially the fact that it supports the micro and small scale borrowers who can take it without collateral. Again, we have faced a number of challenges that have maybe affected our farmers from accessing these loans, our processors, our exporters, And these are some of the challenges. I'm just going to summarize them. One, inefficient public finance schemes and poor understanding of the agriculture sector by financial service providers. Most of our financial institutions actually are not extending loans to these institutions because they don't know the difference. Some of them know the difference, but they are in business and they are not giving it a priority. For example, exporters really need a grace period. You need a grace period to buy your produce. You need a grace period to package. And also by the time your importers pay back, there is this period whereby you are supposed to be paying back the loan. Hence, the grace period of 2 years offered under the Agricultural Credit Facility. Another challenge has been failure to enforce standards for grain crossing the borders. I think this is a hot cake. You know of late how the Ugandan grain has been bounced back, and I believe Export Promotion Board, we are going to highlight more on this bit. It is a challenge. Poor and inappropriate inputs and technologies, for example, fertilizer and pesticides use. We don't have adequate technology, and even the fertilizer and pesticides on the market, some of them are fake, and our farmers complain. You can buy seedlings, for example, and they don't germinate. Another point or challenge has been inefficient and poorly regulated seed industry, the seed industry in Uganda, high road haulage costs for grain coming from farms to processing and to regional markets. There is no reliable rail option. I think we need the train, if the train maybe could be back on board to transport these heavy grain packages, heavy grain costs, hence a challenge. What are the solutions specifically for the grain trade? The grain trade, I think, is your biggest market or the biggest product under the Uganda Export Promotion Board. Enforcement of standards is a solution. Enforce the grain trade policy and East African standards for only processed, cleaned and dried grain to cross the borders. Empower cooperatives to a leading role in supply of fertilizers and other inputs. I think cooperatives and SACCOs can do it better, and they will be better organized really to ensure all the grain that is going to the market is well processed without these foreign bodies. Expedite the rural electrification program to generate power and lower tariff rates. Increase competition in power sector by licensing more distribution companies. How does one access the SCF? This is one of the things that is required to inform our clients, the public. How can you access the SCF? All the applications are not actually brought to Bank of Uganda. We are just fund administrators of this scheme. So the client should apply through a financial institution of his or her choice. The financial institution, which I term as participating financial institution, analyzes the project in accordance with SCF guidelines and their credit policy. The PFI approves the facility. The PFI in question, where you go, approves the facility, extends the loan to you, and then applies to Bank of Uganda for either the 50% if the application is through a commercial bank and Uganda Development Bank, or 70% if it is through an institution like Postbank, an institution like Pride, and other credit institutions under Tier 2 and Tier 3. And the interest rate we have mentioned earlier is 12% per annum for other activities, but the grain trade is 15% per annum. What are the achievements under the SCF so far? We believe we have achieved a lot from the clients and from the beneficiaries as depicted in the performance dashboard that I've just shown you. One, enhancing farmers and agro-processors access to affordable credit facilities from the financial institutions. And these include microloans of 20 million that I mentioned under without collateral under the block allocation arrangement. Promoting commercialization, mechanization, and modernization of the agriculture sector, increasing value to the agricultural projects, resulting into import substitution of produce that attract better prices locally, thus increasing farmers' income. Boosting export promotion of Ugandan-made products as depicted in the dairy, tea, and grain milling sectors, among other products. Key achievements again, increased lending to the agriculture sector, development of innovative financial products in agriculture financing, and improved risk management tools by financial institutions, increased employment levels as more people are employed in the commercial farms and also employed by these exporters in the warehouses, the sorting of the grain. We are happy to note that even those that are educated and not educated, the majority are being employed by these farmers, the exporters, the grain traders, the grain processors. We are happy about employment level. It has also prompted development partners to initiate guarantee packages and agriculture insurance to support financial institutions to on lend to high-risk areas in the agricultural ecosystem. It has maintained its prominence as a proven distribution channel under the public-private partnership approach for medium to long-term financing to value chains in the agriculture sector at more concessionary terms. The other general challenges that are being faced by our exporters, that are being faced by our beneficiaries, are one, higher systematic risks from the environment, the drought, the floods, the disease, and the price volatility, the trade policies, trade practices affecting exports and market access. And also inadequate rural infrastructure and socio-economic conditions along the agricultural value chain, inadequate complementary services to support the farmers along the agricultural value chain, effect of COVID-19, of course, resulting in low production levels, resulting in interrupted exports, no flights for exporters, no low loan repayments, among others. Some financial institutions are still risk averse on lending to the agriculture sector and prefer giving their own funds for under commercial terms. Some of the financial institutions still don't want to advertise the agricultural credit facility at 12% and want to give loans at 30, 25 as per their credit policy, and we pray that these ones also change and support our exporters. Poor record keeping by farmers, inadequate post-harvest handling equipment like silos, warehouses that affect the storage of farmers. And another challenge is the really holistic approach comprising of commercialization and modernization of agriculture that requires much more than access to affordable source of finance. For example, need of genuine inputs and favorable policies. I hope you are aware that the agriculture finance policy is underway, and once it is under implementation, it will solve most of these challenges. There is also agriculture insurance scheme administered by the government of Uganda, and many people have also benefited a lot. Ministry of Finance is spearheading this one. What are the solutions? Strengthen cooperatives and other institutions to support SMEs right from the household level. Promoting financial literacy, consumer protection, and agriculture business education. Bank of Uganda has already embarked on financial literacy and financial consumer protection. Having different loan products for various farmer categories at different levels. Encourage the PPP, public-private partnerships, especially with NGOs and other government agencies, to offer complementary services such as extension services and instituting a regulatory framework to govern genuine farm inputs. Develop agricultural insurance scheme such as crop or weather insurance to mitigate risks in the agriculture sector, especially among the SMEs. The government has already started this, as mentioned before, and then a holistic approach along the agricultural value chains with support mechanism to the farmer, to the exporter, to the agro-processor, and the like. In conclusion, it is worth noting that the government of Uganda cannot manage to solve the challenges of agricultural exports, of agricultural finance in isolation. In order to achieve the export agenda, while creating jobs at different stages along the agricultural value chain, there is a need to develop detailed value chains that integrate job creation analysis at different stages with clear workforce development plans. It requires a combined effort of the farmers, the private sector, the development partners, the exporters, the agribusiness advocates, among others, to make this succeed. Thank you very much for your attention. And maybe we have supported the flower industry, we have supported these modern warehouses, we have supported the coffee industry, the fishing, the purchase of grain, the goats, the chicks, anything has been supported under agricultural credit facility. Thank you very much for listening. My contact address is here. Thank you.
Thank you very much, Madame Rosette. And thank you also for keeping time and remaining within your time of presentation. Dear participants, I'd like to, on your behalf, also appreciate the detail that Madame Rosette has had in her presentation today. There's quite a bit. A number of you who are asking, where do you get funds? I think she has ably highlighted in there and also shown that a number of people have actually taken those loans and are doing very well in their businesses. So now it's coming to 11:30. We are going to go into our Q&A session, which should take us up to 1 o'clock, depending on how much you have to share. So now we'll go into the questions. I'll check for those that are in the Q&A for Madame Rosette. We have a question from Junior, who is saying, thank you, Mrs. Rosette, for the presentation. You have talked about all this financing, and it seems easy to get financing from them, but in reality, it's not. I have visited various financial service providers you have mentioned, but it seems they only fund farms which are established, and when you try to explain yourself, somehow they give you terms and conditions which you cannot manage. It leaves you out. Okay, so he is requesting that his second question, if you can, please share your contacts for further engagement. So she has shared her contact, but Madame Rosette, maybe you'd want to make a comment or a response to that question.
Thank you very much, Brenda. I can see one of the questions I can see is maybe how long does it take to get feedback after sending application for the incentives for export? Is this towards the SCF? I don't know. I wish they could write, I would read them better if they could write them in the chat.
Okay,
Brenda?
the questions are both in the chat and the Q&A.
H&A, okay, sorry.
Yes.
Okay, thank you.
So, yes.
I have which one? Is it the one on
The
process?
one for no, Junior. There was one on from Junior. Right at the end, the last 4 questions.
Okay, Junior, okay. It says, thank you for the, you have talked about all this financing, and it seems easy to get financing from them. But in reality, it's not. I have visited various financial institution services providers you have mentioned, but it seems they only fund only firms which are established, and when you try to explain yourself somehow, they give you terms and conditions which you cannot manage. It leaves you out. Junior, I'm sorry about this, but as I wish you could actually write your complaint and address it to Executive Director Finance, Bank of Uganda. And please feel free to mention these banks, because as far as we are concerned, these banks that we are using are regulated by Bank of Uganda, maybe apart from the Uganda Development Bank that we do not regulate, and we give them the funds. We reimburse them. I don't know why they should toss you around, because the goal is also to have promoting this very important sector in mind, having it in mind and promoting it. So I request that, Junior, maybe you can inbox me privately, and I get to know such banks that have chased you or not supported your application. And then another one, if you can please share your contact. Yes, my contact. I'm going to share it. I think Brenda will share it. Brenda, you'll share the one on the presentation. It
Yes,
is
madam.
for those, I'm going to maybe write it down, but it is the usual. You can even go, by the way, more of the information is on the Bank of Uganda website. Just go to the Bank of Uganda website. You also get the contact, but it is also at the end of my presentation that I'm going to share with Brenda. And then another question is, where do you go to apply for agricultural insurance? How do we help business that is very affected by COVID-19? For the agricultural finance insurance, actually, there is a insurance regulated authority. You can contact those. There's also the other contacts in the Ministry of Finance. We shall also forward them to Brenda and the Uganda Export Promotion Board team to share with you. I'm going to share with Brenda the contacts of agriculture insurance, but there is a Uganda insurance scheme, Uganda Agriculture Insurance Scheme, and then the Insurance Regulatory Authority. But the rest I'm going to share with Brenda to share with you. And also, who are the current PFIs? One, I recommend our website, but I also want to mention that all the financial institutions are regulated by Bank of Uganda. So in short, all the commercial banks, all the credit institutions, all the micro deposit taking institutions should be able to accept your applications and help you. And also the Uganda Development Bank. You can also go to the Uganda Development Bank. We also have a brochure for those who may wish to get real information. I'm going to put an email address to Brenda still. Then you can access all these brochures are actually on the website. All this information that I have given you is on our website. But then should you wish to write the number, it is 0414 258 441/6. You keep changing the last number, 441, 442 until 6. This is the number for Bank of Uganda. And then you can ask for those managing agricultural credit facility. But should you require more specifications, Brenda will be able to help. I'm going to give her the address, the proper address where you can channel your applications. Then this one about the COVID, how do we help business that is very affected? We have actually, Bank of Uganda has actually put rules and regulations to assist all those projects that have been affected by COVID-19. In that we are restructuring, where we had given you maybe a grace period of 1 year, we can add it to 2 years. The repayments, we have extended them. We have actually restructured a number of the projects that we had financed. We bear with you. No one should quickly be harsh to you. You just read what is on our website and you see how we are being compassionate, how we are giving concessionary terms on all this. So we are catering for COVID-19. We are restructuring all these loans that we had given out and are with problems. Then another one says, you can please, I don't know if there's another question I haven't answered, Brenda. Could you please give the email contact? I think most of them want the email.
Yes.
Then the other one is, I have a simple question on how processed coffee, fair average quality, sold to exporter. Does this attract VAT? I think this is for URA.
That was for URA, Madam. That was for URA. There's a question in the chat. Dennis was asking, he's asking about the contact as well, but he says he has faced a similar challenge.
I can insert back the presentation and you see it. But otherwise, in the chat, someone is asking the contacts and I've put it there.
Okay. Madam Dennis, if you look in the chats, Dennis is saying, I also faced a similar challenge where financial institutions want an exporter to have an established farm from which one harvests for exports.
It says, sorry, but what?
If you go to the chat,
yes.
Now, not in Q&A, but the chat.
Share contacts.
Yes, that question has a part B of
How
it.
long does it take to get feedback?
No.
Which one
The
now?
last one, continue down from Dennis Katende.
Share the contacts. Can you read it?
Yes, it says, kindly share the contacts of the Executive Director of Finance Bank of Uganda. I have also faced similar challenge where financial institutions want an exporter to have an established farm from which one harvests for export.
Okay.
Yes.
Where financial institutions want an exporter to have an established farm from which one harvests for export. Similar challenge where financial institutions. Anyway, like I said, I request that you send us an email. Actually, send an email. We can handle your queries through an email. You don't have to come physically to Bank of Uganda. And I'm also going to give you the email address for the agricultural credit facility in particular, where you can just put all your queries. Okay? Through Brenda. Is that okay?
Yes, madam. I think that is very fine.
Yes, let me show you again, maybe the...
Yes, you can put up your contact details so that the participants can be able to take a picture of it or copy it down, and they'll be able to get back to you. You're sharing a different screen, madam.
Just hold on, I just put in a challenge. Sorry. Oh. Sorry. I think I'll send you the whole thing because, okay, just hold on, it's coming back. It's coming back on.
Are you able to get
Yeah,
back?
just hold on. Yeah, it's coming. It's loading. Sorry. Have you seen? Can you see the contact now?
Not yet, madam.
Oh.
I'd like to suggest maybe since you're going to share the presentation with us, you will be
I
able
think
to.
that's better. Yeah.
Yes,
I'm going to share the presentation with you,
yes,
but
you'll be
also
able to share it.
let me just put it under chat.
Okay.
Just hold on. Can you see it now?
Not yet.
Oh. Okay.
I think it's okay. We
Let
can
me put it. Let me put it under the
type.
chat.
You could type it in. Type your contact in chat. So in case there are any other questions, do we still have any questions for any of the presenters? Do we still have any questions for the presenters? Okay, I don't seem to see any question that we didn't answer in the Q&A. It seems all the presenters handled the questions that came through. So with that, if we don't have any more questions coming through.
Brenda, I
yes.
put in the chat for more information.
Yes, madam.
There is an email address in the chat.
Yes.
Have you seen it?
Yes, we have.
Yes, so that is the address for all to see.
Okay. Okay, so you can take Madam Rosette's email from the chat, but we are also going to share presentations from all our presenters today. So if we have no more questions, allow me to wrap up and conclude today's session. We had our session on financing for exports, where we had 4 panelists. Madam Esther Katende took us through how you contract and what you include in your contracts to ensure that your transactions are secured and you don't have issues after that. We also had Stephen Wesigwa taking us through the detail of how and what it means to have a financial statement and how to interpret your financial statements as business people. So don't shy away from having good financial statements, because this, at the end of the day, will define the character, capacity, capital, your collateral, and your condition. And then we had Willie taking us through the export incentives. I hope many of you now appreciate where and how to get that information so that you take advantage of some of these incentives. Then finally, we had Madame Rosette taking us through the different sources of financing and how you can access them. So I'm sure we have a good detail of what we need in terms of exports for financing, but continue to send us your input in our evaluation so that we are able to get more details for you in case there are gaps and there are things that we haven't covered. So ladies and gentlemen, at this point, I would like to fully appreciate your participation and also take the opportunity to remind you that next week we shall be having our last set of the trainings in this month series, where we're going to have marketing and digital marketing, and that will be still on Wednesday and Thursday next week. Same time, we start at 8:30, we open the webinar, and at midday to midday, we should be concluding. If you keep time, we shall be able to also keep time and make sure that we go through the webinar fast enough. So with that, ladies and gentlemen, I would like to declare this webinar closed. Thank you so much. Have a blessed day.
Thank you, Brenda. Have a nice day.
Thank you, Steve.